So banks and non-banks are actually embracing the world of innovation in quite an intriguing way, but also in two very, very different journeys. For non-banks, they don't come to the table with the incumbent thinking and structures that a traditional bank would actually come. So a lot of them tackle the challenge purely for the idea of disruption. So they'll explore the ideas of the needs in a market, they'll explore the opportunities of a market, and quantify them in a very different way. The second part of the bank, and this is where a lot of my work's become quite interesting, is actually helping the banks understand and appreciate that different way of looking at a market. And for a lot of banks, it's basically about how do we look at a market differently and re-ask the questions of why. Why does unsecured lending exist? Why does foreign exchange exist? Which parts of a community does it serve? Why? What is the value to them? And asking those core questions allows both a non-bank and a bank to re-evaluate what is the actual value proposition they put into a market. So innovation isn't necessarily damaging existing business models, it's challenging their value proposition. One of the things to realize in the banking sector is most of their commercial model was designed almost 100 years ago. This includes everything from treasury, mortgages, consumer finance. It's been around for a long, long period of time. The biggest quantum leap we've seen in that 100-year period was the evolution of core banking products in around about the 1980s. And this is when a lot of banks actually decentralized the function of a bank. So what it actually means, we're evolving the commercial model. Not in a damaging way, but I actually believe in a very strong way. And so the best example I give of that is that as we progress in the information era, we're having more and more intelligent conversations with our financial institutions. So in order for banks to be a bit more creative and to embrace the innovation journey, I've boiled it down to 4 C's. 4 key questions that I help them dip their toe in the water and to experiment up to the level of their appetite. Because remember, for very conservative banks, it's a little bit more challenging. But for ones that are actually keen to embrace the change, they'll be more experimental. So the first one is around context. How do they structure themselves to be open to experimentation, to try new things and so forth? This includes everything from the way they design their office to how the way their finances are structured. How do they invest in potential opportunities? Those sort of things is key. The next is around culture. So how do they work with their internal teams to say, okay, look, you have 50,000 employees. How do you embrace the possibilities of 50,000 people? Because I can almost guarantee a large percentage of those 50,000 people will have ideas themselves. The next is capability, so giving that organization the capabilities to see through an idea. And lastly is collaboration, is saying, okay, look, as a bank, we have certain competencies, but we're not great at this. So why would we do it? What if we stick to what we're good at and partner with someone who's equally as good at that adjacent capability? So one of the key things for banks is they have to figure out not only how do they create new products, but how do they generate profit, particularly return for shareholders out of that process. So there's 2 sort of operating things here. Is one we call bimodal organization. And what we say is bimodal means is you have the stable run the business, it's how you do business today. But you create a separate kind of structure, an innovation lab, an innovation team, or a ventures company that allows experimentation to happen in little breadcrumbs, basically, so little tiny experiments. But what it allows then is that for that little experimental entity is to actually justify each of those experiments based on enterprise value back to the mothership. So they say, okay, we might spend $20,000 on an experiment, but it's going to translate to $500,000 worth of enterprise value because we'll learn X, Y, Z. And that's the key thing of saying, okay, how do we experiment with tiny resources, but generate clear, tangible, measurable returns to the mothership?
So far, Scott's session was a very interesting session. I think it was quite inspirational to hear his story. I think it's very important for the industry to get together like this and to just swap stories as to what they see as being important. And so far, I found Scott's presentation quite interesting, just because it was quite inspirational and put some new ideas out there. So that was a good one to hear.
Hi, I'm Neil Cross from DBS Bank. DBS Bank is the largest bank in Southeast Asia and it's headquartered in Singapore. My role, I'm the Chief Innovation Officer. I set and drive the innovation strategy for the group. So at DBS, the Innovation Group, sole mission is to evolve the culture of the organization. That means as innovators, we don't actually invent anything. That's not our job. And so everything we do has to be in partnership. We involve as much of the external ecosystem as we can. So what we do is we build relationships inside the bank across all the different divisions. We build relationships all across Asia with universities, startups, corporate partnerships, government agencies, and then we bring them together in very certainly fun, but extensive innovation programs, which then create sparks of joy that then we turn into products and services for the future of our organization. So we do a huge amount of open innovation. I personally feel that banking has been massively disrupted, and if bankers could have solved this, they would have done it by now. We need to look elsewhere. Well, I used to be able to predict what happens in financial services. I've completely given up. I'm sorry. Every week I hear some news story which changes my mindset around. There's a few things for certain. One is there'll be less banks. Secondly, there'll be less money in financial services. And third, there'll be a lot more irregular players. Just recently, I saw that, for example, Google, Facebook and Apple went and petitioned the US government to get more access into digital financial services. So on one side we have these huge tech giants, and each of them have over 1 billion customers each. On the other side we have tens of thousands of fintech companies with huge amounts of funding. And so between these two forces, they're entering a $1 trillion market that is financial services. And so all I can say is, it'll be different. It's a very difficult compete. I suppose for us being an Asian bank, the best example for us is Alibaba. And so when we look at competing up in China against this huge e-commerce, huge e-commerce giant, essentially, who managed to grow from 0 funds under management to 100 billion in about a year, that is a massive growth for any organization. And so the things that they do really well, they really understand their customer to a very, very detailed degree. They are very, very scientific about how they utilize data. They're very smart about they use leading edge technology, and they create great experiences that their customers love. And so for us, it's not so much looking at them and thinking, how do we copy their products? For us, it's more about how do we copy their processes, and then how can we create products which our customers enjoy using, which reduce friction and give them a highly contextual financial offering. Banking in 2025 is going to be vastly different from today. Years ago, well actually not even years ago in fairness, a year ago, I could kind of predict where I think the industry is going. Now I completely give up in fairness, things are moving way too quickly. On one side, we're getting tens of thousands of well-funded fintechs entering our industry. On the other side, the sleeping giants are starting to awaken, the Google, the Amazon, the Alibaba, the Facebook, are moving into our industry. The only things I can say though, one, there'll be less banks around in 10 years than there is today. Two, there'll be a lot more technology and a lot less friction in financial services. Three, there'll be a lot less cost in financial services. And four, there'll be a lot more non-traditional competitors, a lot more fintech and a lot more tech and e-commerce giants. I'm not concerned about competing with other banks. We've done that for years. What I am concerned and competing about is these new wave of tech, e-commerce and fintech players. Just look at Alibaba in China, what a great case study. Went from $0 under management to $100 billion under management in about a year. That made it the fastest growing bank in the world. Look at Starbucks, 8% of their profit now comes from the interest on those stored value cards, making them one of the most successful payment companies on the planet. And so what we have to do, rather than look at their products and services and emulate them, our strategy is to very much look at the processes they use. So how can we start to build the culture of a tech company? How can we think about building platforms? How can we think about engaging ecosystems? How can we move a lot quicker? How can we get the nimbleness of a startup combined with the culture of a tech company? But hey, it's daunting, and they've got wonderful brands, they've got over 1 billion customers, and people like Apple, for example, have almost a billion credit cards on file, That makes them the world's biggest bank by some way. So I can tell you what, 2025 is going to be a very interesting place to be in financial services. But the epicenter of all of this, where it all starts, is not America, it's not Europe, it's in China. So my recommendation, go have a look what Ping An Bank are doing, CM Bank are doing up there, Alibaba, what people are building into WeChat. This is where banking is changing, and it's happening in China first.
Hi, I'm Derek White, Chief Design and Digital Officer at Barclays. Mobile technology is changing the way that banks interact with customers. At Barclays, our customers use their mobile banking application 26 times a month. They use the traditional web 8 times a month, and they're going to branches 3 times a month. It's creating a better experience, it's tightening controls, and it's fundamentally driving costs out of the organization. An example of that is that our customers in the United Kingdom can get a loan with simply 7 taps on their mobile phone. Financial technology, or the fintech space, is one of the hottest spaces in all of startups today. A flood of venture capital is coming in, creating new entities and challenger banks to heritage banks. It's giving the opportunity for banks to up their game, to increase the creation of their own future. But it is creating challenges. Traditional banks are seeing a wave of new entrants enter the financial services space, or the fintech space, as a flood of venture capital is coming into new payments companies and disruptors of all aspects of financial services. It's a real opportunity for traditional banks to up their game, to create their future. And magic happens when we do it in co-creation with those disruptive startups. A winning electronic banking experience anchors in a recognition that people really only want to do one of 2 things. One, they want to be able to DIY on their digital device. They want to be able to complete a transaction, search their history in a matter of seconds by themselves on their digital device. Or secondly, they want to be able to have a shared experience, whether that's with a colleague in a branch, with their friends, or with others. And that's where social comes to play. It's either DIY or it's a socially shared experience. And as banks and financial institutions create their future, if they design their organization, they design their products, their experiences around those 2 principles, they've got a winning future. The blockchain technology has a fundamental opportunity to disrupt every aspect of financial services, but not just financial services. Whether it's payments or the back offices of the investment bank, the inherent nature of the distributed ledger, the protocol and the technology that is the blockchain is an incredible advancement in computer science that can change the face of financial services. There is a future for cash, payments, and paper documents in branches, but it's a limited future. Technology is moving at such a pace that it's replacing all of those. But that future all depends on what people want to use. As long as people want to use cash, then cash will exist. As long as people want to use paper, then paper will exist, and financial institutions will adapt in line with what their people and their customers want to use.
Hi, I'm Asad Batla. I'm head of retail banking in Bank Nizwa, Oman. In today's world, Middle Eastern market are a little behind the rest of the European or American counterparts. Internet banking or digital banking is being used as providing information to the customers, providing transactions at best. It can be the next steps in digital banking is to improve this customer experience by giving them straight through processing. So if a customer request comes in, it should be addressed in 30 seconds and the process has to complete. We are a little behind that, although other parts of the world are catching up. Although our front ends are very good, it looks like the modern digital banking, but I think a lot has to improve in this part of the world, and it is happening. Some of the banks are doing it. We have done it, and other banks, I'm sure, are really doing it well. The banks that have not stayed with the times, that have actually stayed with the old traditional way of banking, mostly in branches and offline, are actually facing the challenge from banks that are more technology savvy. They have more internet banking solutions, they have more straight-through processing, they are combined with fintech and actually having the customer solutions delivered immediately are actually gaining momentum. To the banks, the challenge has come from players like PayPal, players like Zap. What they're doing is they're revolutionizing the payment systems. What they're doing is, instead of going through a centralized system, taking time, They are actually going through one-on-one, peer-to-peer basis, and they are resolving payment problems for customers instantly without exposing them to security issues. So I think there is a lot of challenge from these new starts, but as bankers, at least from our philosophy, we are not fighting against them. We want to collaborate. We want to form an industry regulation that actually forms a nice ecosystem that will help the industry go forward, and in the end, customers will gain if we collaborate with the new entrants. The winning electronic banking strategy looks like, in retail banking environment, a mobile phone. All the solutions are app-based now. We have the experience, the download of mobile applications is 10 times more than internet banking utilization. So it is very clear customers are actually using mobile phone as the device, and they want solutions on that phone. So really the future digital technology looks like M technology, mobile banking. Mobile banking is catching up. Today's session we heard from all the contributors that mobile banking is the key. And for other wholesale, for corporate banking, and for rest of the commercial banking, the new technologies that are breaking the momentum are actually the ones that will go forward. The example is blockchain. Blockchain is revolutionizing commercial banking, where actually private ledgers, where C2C solutions are actually taking and resolving much faster the problems that the customer had of documentation, of taking 17 days for a transaction. It is happening now in 2-3 days. So future of digital banking is bright, and that's what banks are focusing on now. Cryptocurrencies and bitcoins are actually revolutionizing the payment industry. Although in the past the Bitcoin has fallen from $1,100 down to $200, but in the recent months it's gone back to $400. So the cryptocurrencies are coming back. The problem with that was the central ledger, the system which actually documents who owns which Bitcoin. Now that there will be a ledger and customers are actually not going to lose the value, the trust will come back. Once the trust comes back, it can take to a larger payment transaction in the market. However, it is the role of the banks. It is people like us bankers who actually need not fight against this. We need to look at it. We need to collaborate with the regulators and bring this to the mainstream, because it helps the banks. It helps the bank get into the newer world, the millennials, to address all the problems the customers are having today of lead time, which takes longer, and it takes a lot of steps to do certain transaction. With this new technology, it can reduce the steps. So we need to embrace the technology and the ecosystem rather than fight against it. The question of the question that is cash and checks, are they going to stay in mainstream or not, is a fundamental question to banking. Today, if you look at it, the bankers will cringe if you say that check and cash will go. But tomorrow, in the future, it is going away. We've seen transitions. When credit cards came, it replaced cash. Not fully, but a lot of percentage is gone. Check payments are being replaced through electronic banking, through digital banking, through mobile phones. So slowly, so it is not a fight against these denominations or these type of transaction methodology. What suits the customer, which means easy transaction, and what suits the bank is cheaper and economical way of transacting, is the new technology. So I think we should not resist it, but we should work along it. If it gets replaced, it will be replaced over time. There is nothing as extinct cash or extinct checks at this point, but we are looking at fast replacement of cash and checks from the banking system into electronic banking.
Good afternoon, I'm Dominic Coadi. I'm the Digital Financial Services Leader at EY in MENA. To make the most of digital banking, actually we need to define what are the objectives of the bank through digital banking. I mean, basically, we've interviewed more than 80 leaders at banks, and we've identified that what they're looking after for digital banking is growth, to enable them to deliver their growth agenda. And they're doing that through mainly 4 areas. The first one is about acquiring more salaries. The second one is about getting more loyalty from the existing customer, providing them more convenience as well to help them buying more products, and also to get some fair share on this huge remittance market that we do have within the Middle East. So to do that and to enable that, they need to make it right with digital. And making it right is about 4 different things. The first one is to have the first dimension, which is the customer engagement technologies. Here we're talking about the mobile banking app, about the online banking and so forth. Second one is about the digital infrastructure, the core banking, the process automation. The third one is about the know-how in digital and the digital assets. Here you're talking about the value propositions, you are talking about the data, you're talking about the customer journeys, and the last one, which is about the innovation capabilities. What we've seen currently in the region is that usually banks do have a wider focus on the first 2 dimensions to the expense of the last 2. So our advice is to the banks would probably be to say, invest more on your digital assets and put yourself in a situation which will enable and foster innovation. Traditional banks are losing ground to their traditional and non-traditional competitor in the region at quite an accelerated pace. Traditionally, the conventional banks were quite protected by a very strong regulation and also a low level of competition, at least lower than other parts of the world. But quite recently, we have seen a combination of 3 different elements. So first, a couple of years back, new licenses were granted to subsidiaries of banks or new ventures for developing the Islamic banking offering, which has created a new generation of banks without any legacy, being extremely agile and rapid to adopt the digital agenda. Secondly, we've seen as well some bilateral agreement in between countries to enable or to ease the establishment of new operations within remote countries, which was further accelerated by the ease of having some operations when you're a digital bank. And the last point is this huge remittance market, which is attracting loads of non-conventional financial institutions. A winning electronic banking strategy would certainly involve a couple of dimensions. The first one would be about agility, being agile. Traditionally, banks know how to deliver an 18-month core banking transformation, but they're probably not as used of delivering a 4 weeks, a new version of a mobile banking app. Secondly, it would be about developing the right value propositions. Some new functionalities are sometimes put in place without being really connected to a value proposition, which makes things more confusing and add further complexity for the customers.
Nima Abuwarda, you can check me out on finding-nima.com. I'm just launching a blog. So banks are in trouble if they stay still, right? They can't afford to ignore what's going on in the big bad world. They can have a slice of the action if they get into startups and buy into what people are doing in terms of disruptive technology and so on. But it's not just about having a slice of the next big thing. It's also about their own survival. This sort of technology can take market share from banks globally. They have to not only just be aware of that, but they need to realize that they need that sort of technology to be part of their internal systems. So what we saw today was some banks sharing with us what they're doing in order to understand what's going on in the world. Very clever really when you buy into it and you're sort of like a co-investor. Brilliant. And also the fact that banks are saying that we need to do this because it's the only way to survive, to grow. And really, though, how do they justify the money that they're spending? That's the big question, because banks have to conform to very strict regulatory issues and accountability issues. So this money is high risk. How do banks then deal with that? Unfortunately, we didn't get to know a lot about the specific programs that are going on, except for Barclays. Barclays was very vocal about what they're doing. I'm sure people can go and check it out on the internet. I'm saying this because, you can talk for ages. The big takeaway, though, is that really people like Barclays, they're doing a great job at saying to banks, what are you about? Come, let's talk together, let's co-invest, let's build together, and in fact, you can give us invaluable hours and hours of disruptive know-how. It depends on where the banks are based or where they're operating. So, for example, what's going on in the UK or the US is very different to what's going on in this part of the world. There are many reasons for it. Banks in the Middle East are still very much protected behind regulatory walls. The fact that, for example, startups and digital companies can't always get themselves up and running here, whether it's a funding issue, whether it's an actual licensing issue, red tape, bureaucracy, and so on, is still protecting banks in this part of the world. So, for example, we heard that Barclays in the UK, 7 clicks takes you to a loan on your mobile phone. That does not happen in this region.
Hi, my name is Keith Gross, Head of Financial Crime and Security at the Banking Payments Federation in Ireland, and also Chair of the European Banking Federation Cybersecurity Working Group. Cybercrime in financial services is a very serious issue. It's something that the banks should be mindful all the time, and as they approach omni-channel directions, products, etc. So it's something that is an ongoing challenge for banks, and not only cyber crime, but also the social engineering aspect of that crime is also an aspect. There's numerous strategies the banks are taking, whether at governmental level, also at law enforcement level. They're mitigating attacks by sharing information, threat monitoring, intelligence gathering, etc. So I think it's something that we have to do on a collaborative basis across multi-sectoral, multi-agency approach is the way to combat cybercrime. The banking community have been involved in combating cybercrime for numerous years. They've looked at user-based analytics, behavioral analytics, network share in terms of monitoring their network in terms of malware. Also education and awareness of the consumer is very important in terms of protecting the consumer and making them safe online, and that's something that's ongoing and is an important aspect to cybercrime and cybercrime prevention, and online fraud is education awareness of the end user.
Hi, I'm Mike Imeson from the Banker magazine. I chaired today's event. It went very well. We actually had more people than ever. The previous 2 conferences we've done with the UBF, 2013 we had 250 guests. Last year we had about the same number, but this year about 300. So it went really well, and we had a really good selection of speakers. Well, the speakers, too many to mention really, but the ones that stand out would be the UBF chairman, His Excellency Abdulaziz Al Ghurair. Also, we had the chairman of the UAE Central Bank, Scott Bales. He was our keynote speaker. Scott's based in Singapore, and he runs his own company called Innovation Labs Asia, and he advises lots and lots of banks around the world on innovation. And we also had Neil Cross, who is Chief Innovation Officer for DBS Bank, which is a big bank in Singapore. And I should also mention Anthony Brown, who's the Chief Executive Officer of the British Bankers Association. It was great to have him here as well. Key takeaways, obviously innovation. Innovation is very important. I know it sounds a little bit trite. People say, oh yeah, innovation, you've got to invent something new. But really today, we got right down to the detail of what it's all about in banks. We had, I mentioned those other speakers earlier, but we also had the Chief Digital Officer for Barclays, and he went into a hell of a lot of detail on explaining what Barclays is doing to improve the bank's digital banking offering. Well, the other takeaway was that despite all of this innovation and all the digital angle, the customer is still the most important thing. And one of the presenters, I think it was Scott Bales, was saying out of all the things that banks have to do, and he listed about 10 things, putting the customer first is very important. Now that's quite an old-fashioned term, putting the customer first, but it just illustrates that despite all of these new things that are happening in banking, when it comes down to it, good old-fashioned putting the customer first is still very important. And interestingly, Facebook, it's in the name, Facebook, it's a very personal organisation. Facebook is the model to follow, I think, for banks if they want to put the customer first and win and retain customers.